this show, and I like to call it Money Monday. This is where we speak to one lucky viewer and we ask them what their foremost financial goal is. My guest today is Kamal Sharma. He's joining us from New Delhi. Kamal, thanks so much for joining me today. And what is the goal that you've selected? You shared with me that you want to retire in 10 years. You are 34 years old. Why do you want to retire so early?
Okay, so thank you, Alex. So currently I'm 34, sir, and I want to retire at an age of 45. So by that time, so it's been 11 approximately years.
Right.
I want a corpus of 50 lakh for something to build. I have a property of mine in my hometown, right? And I want to invest some money wherein, so I heard of a lot of things about SWP. I wanted to know the entire concept of it. And if I can invest some money for 11 years so that I can get a lakh or 1.25 lakh every month for managing my expenses. So that's what the idea is.
Okay, so Harsh is going to help you out, and please know that over the course of the next few minutes, the stage is set for you to ask as many questions to Harsh as possible. I'm just going to lay the context and then open it up. So you were 34, your goal is to retire in 11 years at the age of 45. You are married, your wife is also earning an income. Your monthly income is 2 lakh rupees, your expenses stand at 1.25 lakh rupees, and your monthly investments are at 55,000 rupees. You're currently investing in mutual funds as well as in the Sukanya Samriddhi scheme and the voluntary provident fund. So you're upping the amount that you put in the provident fund every month. The Provident Fund Corpus currently stands at 15 lakh, savings account is 1 lakh, mutual funds is 5.5 lakh rupees. You live in your own flat and your current liabilities stand at a 39 lakh home loan, a vehicle loan of 6.5 lakh and a personal loan of 1 lakh. So I've set the context. Harsh, over to you.
Yeah, hi Kamal. Very quickly, if I just do some basic calculations, okay, because you mentioned that you want to retire at the age of 45. Right. And so there is going to be required, and you said you need every month about 1.25 lakhs, the amount that you're spending today. So if I just do some basic calculation, assuming a 7% inflation, so that 1.25 lakhs, we are taking it adjusted to inflation at the age of 45, and thereafter, I'm taking a life expectancy of approximately 80 years. So what I'm only trying to do by this exercise is to ensure that you have a cash flow up till your age of 80. Okay? Okay. And if you were to look at, as I said, the monthly expense of 1.25 lakhs, you will require approximately 10 crores at your age of 45. Okay. If you can accumulate that corpus of 10 crores by the age of 45, that means that you can look at retirement, assuming that you'll get an inflation adjusted cash flow of 1.25 lakhs every month up to your age of 80. At 80, the entire corpus will exhaust. Okay. So you'll not be left with anything at your age of 80. Now to accumulate this corpus over a period of 11 years, if I assume an investment return of approximately 12%, every month you will have to contribute about 3.6 lakh rupees. So wherein you're currently investing approximately 50 to 60,000 per month, this per month investment goes up to 3.6 lakhs per month.
I'm curious about what you think, Kamal. When Harsh says 10 crore is what you need to set aside over the next 11 years, is that a number that you had contemplated?
No, 10 crore is way beyond my expectation. But at the same time, you said 80 years of age, sir. I don't think so we'll be able to live up to that. Considering we are staying in Delhi and Delhi is so polluted. Going by the trend, we're gonna die by 65. So that's what I am aiming. I'll be alive till 65. So that's how I am calculating.
But okay, Kamal.
So down the line 20 years, if I start from 45, so if you can calculate that and probably tell me then.
Okay, so that's a fair point. But here's my question to you, Kamal.
Yeah.
You're aiming for 65,
right.
But assuming that there are a lot of technological changes and we move towards cleaner energy and various other things take place, which we don't know right now, right?
Okay.
What if your life expectancy is not 65 and is actually 80? At that stage, you're not going to have the ability to say, hey, I need more money, right? Because you're not going to be able to go back to work. Is that not difficult?
So Alex, in that case, I'll increase my retirement life. I'll take retirement at the age of 50, or I'll probably go up to 55 in that case.
So you'd be willing to stretch. Okay, Harsh, I think that is what you're talking
Yeah,
about.
yes. So in fact, Kamal, I also want to highlight this point. So while you mentioned that you don't see yourself living beyond 65, I wish and I pray to God that you have a long life. I mean, you should not think of it in that direction. But nevertheless, from a planning standpoint, when you plan for things, plan as if you're going to live forever. So in case you were to live, as Alex said, that you go beyond 65, then what are you going to do at that point in time? It's always good to have a provision up to age 80. And in case something happens earlier, then fine, then you got something left for your family to inherit in that case. Imagine a situation that in this case, I'm even more concerned, given the advancement in medical sciences, given an advancement of technology in that context that doctors don't let you die. They'll put you on ventilator till the time they can. So imagine a situation where you go beyond 80. So I was worried about a question you would throw at me saying that, hey, this is only till 80. What if I live beyond 80? So you pleasantly surprised me, at least in that context, to say that 80 is way beyond your expectation. But anyways, now since you also mentioned that you're willing to extend your retirement age, so I did another set of calculation for you too, which brings things within the comfort levels. So if not 50, I'm going to be disappointing you to say that, look, why don't you just go all, the entire mile, you walk the entire mile, say 58 or 60. So if you were to retire at 60, then what the scenario looks like. Pardon me to, absolutely, dishearten you with this kind of extended work life. But in case you were going to work until 60, then the retirement corpus that you need at that point in time is not 10 crores, but it's going to go up to 17.5 crores. Okay, but don't be disheartened. Let me give you the good news now. Now, to accumulate this 17.5 crores every month in place of 3.6 lakhs, which was the earlier case, you need to now only put 83,000 rupees per month up till your age of 60 to accumulate 17.5 crores. So 83,000 rupees investing every month is still within reach, as I understand. If not immediately today, but going 1 or 2 years down the line as your income increases, make sure that you increase your SIPs. So that seems to be a much better equation for you at this juncture.
Is that possible for you, Kamal?
No, definitely. Down the line, 1 or 2 years, that is all possible. I can manage that.
Fantastic. And of course, what Harsh has not spoken about is you have 2 lakhs of income. We've just on this show discussed how you can get rid of certain loans. If you can get some of your loans out of the way, and if you can increase the amount that you set aside, you can actually shrink the time that you need to work quite considerably, because you have a sizable income. If you increase the amount of that income that you set aside every month, I'm sure you can save a bigger corpus. But it's been a fascinating conversation. Thank you so much for that glimpse into your life, and hopefully this conversation has been beneficial to you.
Definitely, Alex. Definitely.
Thank you so much.
Thank you so much.
And thanks so much, Kamal, and thanks so much, Harsh, for joining us in the studio. And thank you for watching the first episode of Your Money Matters. Do stay tuned. This is NDTV Profit.